Hey everybody, and welcome back to another monthly market update. I'm Nick with the Daymond Realty Group. Today we're going to be having a look at what happened in the month of July, what are the differences that came into play month over month from the month prior, and what is happening overall in the GTA real estate market and surrounding areas. If you enjoy the video, I'd really appreciate it if you subscribe to the channel and leave a like. It helps us out a ton. All right, let's get into it. All right, so here's a couple things that we noticed as we moved from the month of June to July. We noticed that, we have gone through a couple of interest rate hikes now. So the months of inventory available across the markets that we work has increased. We went from 1.8 months of inventory in June, which is more heavily weighted into a seller's market, into 2.9 months of inventory as we close out the month of July. What does that mean? It means that there's more properties for buyers to choose from. Sellers, you're going to be sitting on the market for a little bit longer. Buyers, you're going to have a couple more options at your disposal. What's contributing to these factors? Why is this happening? Well, we're in the slowest time of the entire year in the summer. We just got hit with 2 additional interest rate hikes back to back. That'll do the trick across pretty much any market. So let's have a look and see how these things translate as we move forward into the month of August. And let's dive into each area that our team works to have a look at how the markets have been affected. Let's have a look at Burlington. Burlington average sale price is down about 2% month over month. So little bit less, starting to trickle down. This is typical what we see happening in the summer. And then what the big change that stood out to me was the average days on market for homes across the Burlington city were up 19 days. So homes are taking a lot longer to sell. There's no surprises here based on what's going on in the market, based on the interest rate hikes that happened, based on it being summer. Nothing's really surprising me here. So this is pretty normal based on everything that we're able to see and everything that all the information that's coming out about the real estate market in general. So we'll see how everything tends to move forward going into the month of August. I think that once people get over these rate hikes, as long as we're not slapped with another one, Burlington will start to pick up steam a little bit as we move into August. Let's sit back and see how that goes. All right, let's jump into Oakville. Oakville sale prices are down 3% and the average days on market for Oakville are up 21 days. So very similar to what we're seeing in Burlington. Again, very reflective of what we're seeing in the overall market right now. I'm going to be interested to see if one of the areas that we're going to cover is going to be able to fight the typical trends of what's happening in the real estate market right now in certain areas. So Oakville, again, very similar to Burlington, down a little bit in price. Days on market is up. Very reflective of what's happening due to the time of year and the rate hike. Alrighty, Mississauga. It looks like Mississauga here felt the effect more than a lot of the surrounding areas. Mississauga was down 5% month over month and a whopping 31% up for days on market. So things have really slowed down in the city, noticeably more than a lot of the surrounding areas. Is this going to continue into August? We'll have to sit back and see. Let's have a look at Hamilton. All of my Hamilton clients and my Hamilton people, what's going on in the city? Well, surprisingly enough, Hamilton actually, unlike a lot of the surrounding areas, went up 2% for the average sale price. And the days on market is still down, but Hamilton seems to be holding its values really well. I typically will point this towards the overall price range of Hamilton in the city as a whole is significantly lower than a lot of the surrounding areas. So people tend to move towards it. Tends to have a higher turnover rate than a lot of the other areas because of the price point and what it offers. Your money takes you a little bit further in the city, and it tends to fight these price reductions a little bit harder than the surrounding areas, at least for this last month. All right, let's go over some takeaways and forward-thinking thoughts. What we've really noticed here and what my team's noticed, having boots on the ground every single day, is that when they did these interest rate hike announcements, the world stopped. It was like people stopped booking showings, offers stopped getting written, and everybody froze and wanted to see what was going to happen. Well, little than 2 weeks after that, things have hit right back up. It was like somebody hit an off switch as soon as the rate hike was announced. Everybody waited to see what was going to happen. As soon as they start seeing that the economy is not collapsing, well, then the on button gets pushed and everybody starts moving forward again. So we have noticed right away that things are starting to pick back up from the announcement of the rate hike. Definitely we're getting more showings on all of our listings, more offers are getting written, and we do have a combination of more inventory available right now. So is it going to be able to be absorbed by this new activity? Is this activity going to be able to continue into August? We'll have to wait and see how everything goes. But as always, guys, thank you so much for tuning into our monthly market update. I really, really appreciate it. We'll catch you next month.